When it comes to the funding of higher education, private student loans play a crucial role in assisting students in bridging the gap between the financial assistance packages they get and the actual cost of attending college. On the other hand, as the cost of education continues to grow, a significant number of graduates find themselves burdened with heavy debt from private loans. These loans typically have higher interest rates and fewer flexible repayment options in comparison to federal loans. As a result of this burden on the finances, there has been an increase in the demand for private student loan debt relief solutions. What are private student loan debt relief programs? Borrowers are provided with assistance in managing and reducing the responsibilities of their private student loan debt through the implementation of a variety of tactics and initiatives that are included in the private student loan debt relief programs. There are a variety of institutions that may provide these programs, including government agencies, nonprofit groups, and private businesses that specialize in debt management and consolidation. The primary objective is to make available to debtors a variety of choices for reorganizing their loans, reducing their interest rates, or achieving more favorable terms for their payback. How do private student loan debt relief programs work? Number 1. Loan consolidation. One of the most prevalent methods for relieving the burden of private student loan debt is consolidation. Borrowers have the ability to consolidate several debts into a single loan that is easier to manage and has a fixed interest rate through the process of consolidation. This has the potential to simplify the process of repayment by reducing the number of monthly installments and maybe lowering the overall interest rate. As a result, it will be easier for borrowers to create a budget and plan for repayment. Number 2. Refinancing. Take out a new loan with a private lender in order to pay off previous student debts. This is what is meant by the term refinancing. There is a possibility that the new loan will have a cheaper monthly payment or a shorter repayment period because the interest rate and terms of repayment are normally different from the previous loan. Through the process of refinancing, borrowers who have strong credit may be able to obtain more favorable conditions regarding their student loans. These terms may include lower interest rates or longer payback terms, which will effectively reduce the financial hardship that their student loan debt causes. Number 3. Income-driven repayment plans. Even though income-driven repayment plans are more typically linked with federal student loans, there are private lenders who provide students who are experiencing financial hardship with options that are somewhat comparable. These plans modify the monthly payments based on the borrower's income and the number of people in their family, making it easier for individuals who have limited financial resources to take care of their repayment obligations. However, eligibility requirements and program specifications may differ from one lender to another. Therefore, borrowers should thoroughly study their options and communicate with the loan servicer in order to make an informed decision. Number 4. Loan forgiveness programs. In spite of the fact that private student loan forgiveness programs are not as prevalent as those for federal student loans, certain lenders may provide forgiveness choices in certain situations. After a predetermined number of payments that have been made on time, for instance, or in the event of a permanent incapacity or death, certain lenders may forgive a portion of the remaining balance on the loan. There is also the possibility that certain businesses will provide aid with the repayment of student loans as part of their employment benefits package. This presents borrowers with an additional opportunity to lessen the burden of their debt. Number 5. Financial hardship assistance. There are numerous private lenders who provide assistance to borrowers who are going through difficult financial times by providing programs such as temporary forbearance or postponement choices. Through the use of these programs, borrowers are able to temporarily lower or suspend their loan payments without going into default on their agreements. Although these choices may give relief in the near term, borrowers should be aware that interest may continue to accrue even during periods of forbearance or deferment, which may result in an increase in the overall cost of the loan over the course of the loan's duration. Considerations for borrowers. Even though private student loan debt relief programs have the potential to provide vital assistance to borrowers who are suffering with debt, there are a few important concerns that should be kept in mind, including the following. Number 1. Eligibility requirements. There is a possibility that each debt relief program has its own exclusive set of eligibility restrictions, which may include minimum credit score requirements, income thresholds, or particular loan kinds. It is important for borrowers to thoroughly examine these conditions in order to determine whether or not they are eligible for assistance. Number 2. Impact on credit. Because it requires the formation of a new loan account and the possible liquidation of old accounts, consolidating or refinancing student loans might have an effect on the credit scores of the borrowers engaged in the process. Borrowers must be aware of the potential effects that these options could have on their credit and should assess the benefits and drawbacks of each option before pursuing them. Number 3. Long-term financial implications. There is a possibility that debt relief schemes will have long-term financial repercussions, despite the fact that they may provide temporary relief from the payments on student loans. For instance, if you use consolidation or refinancing to extend the repayment term, this could potentially result in greater total interest costs over the course of the loan's lifetime. Borrowers must give serious consideration to the trade-offs and assess the influence on their overall financial objectives during the borrowing process. Number 4. Scams and fraudulent practices. It is unfortunate that the student loan business has witnessed an increase in the number of scams and fraudulent practices that target borrowers who are looking for debt relief. Before submitting any personal or financial information, borrowers should exercise caution when investigating the many choices for debt relief and do research on organizations or lenders that have a respectable reputation. Borrowers who are having difficulty managing their student loan debt might benefit greatly from the services that are made available by private student loan debt relief programs. The purpose of these activities is to reduce the financial strain and provide debtors with options for more manageable repayment. These initiatives may include loan consolidation, refinancing, income-driven repayment plans, or forgiveness programs. To ensure that they are able to make well-informed decisions on the management of their student loan debt, borrowers should carefully study their available options, take into account the implications that will occur over the long term, and be wary of any potential scams. In order for borrowers to take charge of their financial destiny and make progress toward attaining their educational and financial objectives, it is necessary for them to have a grasp of how private student loan debt relief programs operate and to take proactive efforts to investigate the various choices that are accessible to them.